We rolling. What's good, y'all boys, man? Consistent Griff, we back with another video. Now this video, hey buddy, focus up camera. Hey look, hold on. I gotta sit down real quick. This is a good quality video right here, bro. Really, gang, really. And I'm giving this to y'all for free, man. Hit that like button, bro. I'm giving y'all free game. I'm educating y'all for free, gang. But the reason why I'm telling y'all to like it, right, is because the more likes I get on my videos, the more it recommends it to other traders who's trying to learn just like you, my guy. You feel me? So, like the video, man. Hit that subscribe button and, you know, I'll let y'all get back to the education video. But help a brother out, bro. I'm helping y'all. Y'all help me too in return, bro. I'm not asking for no money. I ain't asking for nothing but just the time out your day. Hit that like button and hit that subscribe button, bro. That's all I ask, king. It's different. This video is gonna be a longer video, and this video is dedicated to the people who really want to learn, that's gonna really study and get after it. This video is specifically for y'all. So today's video, the main topic is price action. I want to do a lot of videos of showing y'all price action examples, the definitions, and showing y'all what it is in real time. Because for me, once I learned certain price action strategies, well, I would say strategies, patterns, right? I seen them in real time, and those gave me the confidence to really get in these trades with a lot more money, and like getting these trades with a lot more money to make more money, if that makes sense. So without further ado, man, let's get straight into the video, man. This video is dedicated to y'all boys. We turning it up a notch, we cranking up the intensity. So without further ado, man, let's get straight into it. So let me start up the screen record. 3, 2, 1, boom. So the first one I want to show y'all is the morning star patterns and the evening star patterns. I feel like those right there. And don't worry, this is just one video. I'm doing a lot of videos of different patterns for y'all to memorize. So when y'all see them in real time, y'all be like, oh yeah, Griff told me about this, yada yada yada. Boom, he gave me examples, he gave me definition. Y'all get what I'm saying. But the first ones I want to show y'all is the morning star patterns and the evening star patterns. So let's go find that right here. So it says right here, morning star pattern, right? The morning star patterns, in my eyes, that's an example right here. But in my eyes, if I see two engulfing candles, right? And then in the middle, it's a doji, right? So the two engulfing ones, it's got to be the opposite. One's got to be a bearish one. One's got to be a bullish one, right? Or it could just be vice versa. Those right there is a strong reversal pattern, right? When you see those highly, I wouldn't say every time, but more like highly, I would say 85% of the time price is going to reverse, right? The only time it don't reverse off a star pattern if it's the NFP, like the first week of the month, where it don't respect price action at all. But anyways, let's get straight into the definition, right? It says a Morningstar pattern is considered as a bullish reversal pattern, right? It often occurs at the bottom of a downtrend, and it consists of 3 candlesticks, like I just said, right? The first candlestick is bearish, which indicates that sellers are still in charge of the market, right? It says the second candle is a small one, which represents the sellers are in control, but they don't push the market lower, and this candle can be bullish or bearish. Keyword, bullish or bearish, right? It says the third candle is a bullish candlestick that gapped up on the open and closed above the midpoint of the body of the first day. They could be talking about a daily candle, by the way. This, like, when they say day, they mainly talking about the daily time frame, which each candle means 1 day. This works on, I would say it works very, very well on 4 hour and up. You can probably catch that on like a 15 or a 5 minute, but you know, it's more stronger on the higher time frames. But it says, this candle holds a significant trend reversal signal. Keyword, this candle holds a significant trend reversal signal, right? The last one says, the Morningstar pattern shows us how buyers took control of the market from the sellers. When this pattern occurs at the bottom of a downtrend near a support level, keyword support level. Y'all need to learn support and resistance with price action. They go together like Shaq and Kobe. But it says, when this pattern occurs at the bottom of a downtrend near a support level, it is interpreted as powerful. It is interpreted as a powerful trend reversal signal. See the illustration below. So look, this right here is a prime example, like how I told y'all. The first one is bearish, right? Y'all see a doji candle and y'all see a bullish engulfing candle, right? That's a bearish engulfing candle, a doji, then a bullish one at the end of a downtrend. So you see it. So whenever y'all looking at price and y'all like acknowledging the trade before y'all get in, like, hey, I think price is about to do this, yada, yada, yada. Y'all see morning star pattern, bro. At the end of that trend, you know price is gonna reverse, especially if it's off of a support level that you drawing up, right? Trust yourself. Listen, if you do the study and you do the back testing, why not trust yourself, gang? And listen, if you lose, it's okay. That's the point of having a good risk to reward ratio. Gotta make another video about that. In y'all trades, y'all should only be taking 1 to 3 risk to reward ratios, bro. If you lose on a 1 to 3, right, it should be small, gang. Just because your risk ratio is so big, you could lose like 3 to 5 trades, right? If you get a good one that hits your TP, that 1 to 3 will be way more than what you lost in 5 trades just because you risking the right way. Don't be out working, right, and risk your whole account on one trade. That's not smart, because if it don't work out, gang, you don't have nothing to trade with, gang. Now you gonna be mad and saying that the trading stuff is a scam, bro. Be smart, gang. But yeah, this right here is as you can see at the top, this is an AUD CHF screenshot. It's on the daily time frame, and just look at it, right? So you have all these bearish engulfing candles to the left of it, right? Which it was in a strong downtrend, right? Then as you can see, that one candle right next to that seller's one, price started wicking. It started giving exhaustion even before the reversal happened. So it started giving exhaustion candles, and then it did one more big old bearish engulfing candle. Then it made a doji. Then it made that bullish one. Right there is like, all right, I'm about to be looking to scale in, because the price just switched. The price just went to buyers instead of sellers, right? It says the chart above helps us identify the Morningstar pattern and how it's significant when it's formed at the bottom of a downtrend. As you can see, the pattern occurred at an obvious bearish trend. The first candle confirmed the seller's domination, and the second one produces indecision in the market. The second candle could be a doji or any other candle, right? It says, but here the doji candle indicated that sellers are struggling to push the market lower, which means exhaustion. It literally says the sellers are struggling to push the market lower, which is sellers, right? They're struggling. The price has been changed. It's giving exhaustion candles. The third bullish candle indicates that buyers took control from the sellers, right? And the market is likely to reverse. This is how professional traders analyze a market based on candlestick patterns. And this is how you will analyze financial markets. If you can master the anatomy of candlestick patterns and the psychology behind the formations, you'll be good. So listen, I want to get this through y'all head, what really trading is and who touches it and yada, yada, yada. So the people who move the market are the banks, all different banks, all the people with big money, bro. They're the ones that move the markets. And then you got some retail traders that got a big bag, like billionaires, millionaires that be trading too. Those people are the main people that move the markets. Me and you, we are retail traders, gang. We don't move any of this. We don't, right? So when you see price start giving exhaustion and starting to go or any other way, those are the banks doing it. Those are the people with the big bread, bro. The markets follow them, right? So if you see on the higher time frames of H4 and up that price is starting to give exhaustion, go the other way, bro, lock in, scale in to get a good entry. Scale in, bro. Take advantage of it. Yeah. What's up?
Can I come in?
I'm filming a video right now.
Okay, well, I need to see if this looks good. Wait. Going to the Wi-Fi. Right on.
Yeah.
That's my jewelry too?
Mm-hmm.
Bet.
All right, that's the first one. So now let's get into the second one. The evening star pattern. This one is go-to too, right? So let's read this one. The evening star pattern is considered a bearish reversal pattern that usually occurs at the top of an uptrend. So just like the last one, it's literally the exact opposite. It just happened, what does it say? At the top of an uptrend. So this one is like a reversal pattern for sellers. We just learned about the ones for the buyer. This one is for the sellers. The pattern consists of 3 candlesticks. The first one is a bullish candle, which y'all can see right there. The second candle is a small candlestick. It could be bullish or bearish, or it could be a doji. So it's basically saying like an indecisive candle. It could be either one. Most of them are dojis. The third candle is a large bearish candle. In general, the evening star pattern is the bearish version of the morning star. See the example below. It's literally the same exact thing. It's just the exact opposite. Just like the first one that we learned, right? The first part of an even star is a bullish candle. That means that bulls are still pushing the market higher. Right now, everything is going all right. The formation of the smaller body shows that buyers are still in control, but they are not as powerful as they were. So as y'all can see on the left side, the buyers are in mad control, gang. They got it. They handling it right. Then it started showing y'all the exhaustion candles that it's really not going uptrend no more. It's getting exhausted. People are taking their money out, you know. And then the sellers start going in. The sellers start going in control. The third bearish candle indicates that the buyer's domination is over. They're done. They're cooked. Feel me? They're cooked. It says, and a possible bearish trend reversal is likely to happen, right? See another chart that illustrates how the evening star could represent a significant trend reversal signal. Boom. So look at this, y'all. Literally, bullish doji sellers candle. And it gave exhaustion right before it did that. And it happened at the top of a uptrend, right? And here's another thing, right? So if y'all see candles with a lot of body in the candle, there's a such thing called liquidity grabs, right? Banks trade those heavily. That's how banks make a lot of their money. So if you see, like, have y'all ever got in a trade and it'd be like, man, it bought up hard, or man, it so hard, bro, dang, I missed out. But it had like big body candles, gang. You know that price has to come back and grab liquidity. So you can use the evening star or the morning star pattern to see the liquidity grab before it happened. Everything ties into each other, gang. They all do. So just keep that in mind. I'm really giving y'all gems for free, bro. Make sure y'all is taking these down. These are good notes to have in your brain when y'all really trading and executing in these markets, bro. And it says right here, as you can see, the market was trending up. The first candle in the pattern indicates a long move up. The second one is a short candle indicating that price consolidation and indecision, like I told y'all. Consolidation and indecision. The markets doesn't know where they're going. This right here, before the trend happened, where the markets look like dojis and they don't really have no trend, they just going sideways instead of up or down, that's called consolidation and indecision. It does not know where it's going, right? So let's go on to the next slide. In other words, the trend that created the first long bullish candlestick is losing momentum. The final candlestick is gapping lower than the previous candlestick, indicating a confirmation of the reversal in the beginning of a new trend down, right? The hammer, y'all could really use hammers. They're cool. I mean, they still work, but I want to talk about the very, very strong ones, and I'm really not going to get that too deep into it. If y'all want to, y'all could pause the video on this one and read it and take screenshots. But hammers, they do work. Hammers usually are the same type of thing. They either happen at the end of a downtrend or at the top of a uptrend, and they signify reversals for the other side. So basically, what hammers are is, y'all can see price tried to go down, right? It didn't close down there. It went down there at a certain point in time. It couldn't close down there, and it ended up forming a hammer. So that's another sign that price is gonna trend the other way. Shooting stars, these are good ones actually. This is like the same thing as that one, but I actually want to read this one and show y'all these because these are a very strong one that I use, right? The shooting star one. The shooting formation is formed when the open low and close are roughly the same price. This candle is characterized by a small body and a long upper shadow. It is a bearish version of the hammer. Professional technicians say that the shadow could be twice the length of the real body, right? The illustration above shows us a perfect shooting star with a real small body and an upper long shadow. When this pattern occurs in an uptrend, it indicates a bearish reversal signal. The psychology behind the formation of this pattern is that buyers tried to push the market higher, but they got rejected by selling pressure, right? When a candlestick forms near a resistance level, it should be taken as a high probability setup. So when y'all have these patterns that I'm showing y'all, they can happen anywhere, but they're most good on support and resistance levels. That's why it's so major for y'all to know how to properly draw them, right, where they need to be, and just have support and resistance levels on y'all charts, bro. But this right here is examples, and I'm gonna give y'all live examples on MetaTrader 5 and TraderView after I go over the ones I want to show y'all. But this right here is a shooting star pattern, and that's the candle, and it usually happens at the end of the trends, bro. So if y'all see these, take advantage of them. And that's all of them that I wanted to show y'all. So we got the morning star, evening star, and we got the shooting star. And basically, I'm just gonna show y'all real reversals in real time and show y'all that these are legit. So let's go to TradingView. And let's just go to a, I'm gonna try to find one on gold, try to show y'all one on gold. I don't think gold really has them. I'm gonna look to see real quick, but they mainly are because gold has just been going up. Let's go to a regular pair. Boom. All right, let me see if I can find one just off me eyeballing it. Nope. I'm gonna go to the 4 hour. I'm gonna scroll down to the 4 hour ones. This right here is a evening star pattern, but it did a lower high. So this is still a downtrend because this high right here is not higher than that one. So that's literally still considered a downtrend for lows. But I want to find a beautiful one. That's not one. We want a doji. Man, I'm not gonna lie. Back in 2022 and 2023, price action was so sexy. It would not take that long to see reversal patterns, bro. Never. Let's go to a different pair. See if we could find one. Look, like I'm trying to teach y'all price action, and price action in the regular pairs have been so bad. It's just like, bro, OMG. I can't find out one example to show y'all in real time off of these regular pairs, bro. They just been so bad lately, gang. Let me scroll out. Okay, found one. Boom. This one right here, USD CHF, right? This one right here is still an even star pattern, even though that this candle is really not a big body, but y'all can still see the pattern, right? So as y'all can see, this is a USD CHF. So this right here is still considered a downtrend because you want to know why? This high did not take out this high, right? It could be the most ugliest. It could be the most ugliest structure, bro. As long as you know price action and market structure, this high did not take out that one. So it's still considered a downtrend. Technically, to the book, it's still considered a downtrend. It didn't break that at all. So look, this is a big bullish body right here, bro. A doji and then a bearish one. This right here, and then as y'all can see, so let's just say y'all seen that, right? And you like, all right, I want to scale in and I want to see if I can capitalize off of this trade. So you would go, man, TradingView changed how they stuff is, bro. It look weird. So let's just say you wanted to be for sure, and you didn't want to get in that one. You wanted to see more price action to make sure that it was selling. So let's just say that you got in here, right? Boom, you got in here. You could put your, me personally, if I was trading this, I probably would have put my stop loss here behind that lower high to make sure, like, if my stop loss does get touched, it broke the trend, it's no longer a downtrend. Or to make sure is like, I believe in a 50 moving average so strong, I'll probably would have put my stop loss behind the 50. And I would have had two confluences right there. Like, all right, look, if my stop loss get hit, then it's no longer in a downtrend anymore. And you want to know why? It's because I have two confluences just from me seeing this right here. If it would have went up and broke that high right there, okay, it broke the trend. It's no longer a downtrend. And if it broke my 50, then I know for sure I took a good setup and, you know, it just disrespected price. So, and then for the take profit, right? So I trade in support and resistance levels. So I probably would have had my first, well, I already have my support and resistance levels drawn up on this right here. So I probably would have took my TP all the way down here just because I already had my support and resistance levels drawn up. I probably would have took it all the way down there, and as y'all can see that it went down there. And I'm not being cliche. I have all the I have all the pairs that I draw up already drawn down with support or resistance level. Like when I trade a pair, that's the first thing I do when I mark up my charts is draw them up. So, and then my stop loss would have been behind the 50. Trading behind the moving averages is like, if you don't know price action, where to put your stop losses properly, you could move, like you can use your moving averages as stop losses too. It's good to know how to use both ways. So when you get in a trade, you have a lot of confluences for you not to be nervous and just let the trade cook. But look, let's just see the risk reward ratio. That's a 1-to-6. 56 pips for 329 pips, right? It's a 1-to-6 risk reward ratio game. That right there is fire. I have to make a part 2 of this video because I forgot to tell y'all about the tweezer tops and the tweezer bottoms too. This right here is a perfect example of a tweezer bottom like reversal pattern, and as y'all can see, price shot up off of those. I cook off of tweezer top and tweezer bottom, so I got to make a separate video for them trades too. So that was a even star. So let's go try to find a morning one. Let's see. I cannot find a morning pattern. Here goes one right here. Boom. Perfect one. It ain't a doji, but this is a morning star pattern. This one right here, gang. Boom. So as y'all can see, just to have more confirmation, you could have put, I mean, that's a bad entry right there though. You would have been drawdown, but eventually would have went to there. But let's just say if you was bold, right, I probably wouldn't have gotten in like this. I probably would have waited some more. But let's just see if you got in. I probably would have got in right here after it made a this, but it couldn't break under there, and I probably would have put my stops right behind this one, gang. And if we trade in support, I probably would have took it up somewhere in here just because I know these are big body candles and it's got to grab liquidity somewhere in there, gang. So on the 4 hour, yeah, you would have been in you would have been in consolidation for a little minute, but you still would have been in profit though. That's a good part about that. And let's just see the risk reward ratio. 48. It's a 1-to-4 risk reward ratio. When y'all get in trades, always have higher than a 1-to-3 and y'all be good. But this one is a 1-to-3. And it didn't hit the TP, but it gave you a good amount of pips to where you could have capitalized, bro. So we had the morning star, the evening star, and there was one more shooting. Okay, these type of reversals. That's low key no, that's not a shooting star. I think that's a hammer was what the other one said. This is low key a hammer. So you could have got in off a morning star and a hammer candle right there and went crazy. But this is low key a 22-minute video, so I'm gonna cut it short right there. And I'm gonna make a part 2 to these type of videos. If y'all like these type of educational videos, y'all let me know in the comment section, bro. I got y'all. But without further ado, man, I'm gonna end the video because I don't like making long videos. Or if y'all like these long videos, let me know. I'm just kind of insecure making a long video, bro. I don't know why. But hey, if y'all like the video, make sure y'all hit the like button. Make sure y'all hit that subscribe button. And I love y'all, man. We got these videos rolling out. I got y'all. I'm finna have these joints rolling out. But without further ado, man, peace. I'll see y'all in the next video. Let's get it.